All right. Hi, everyone. Thank you for being here. Very pleased to be moderating this panel about on-chain derivatives for investing and trading today. So we have with us four amazing people. I guess maybe we can start with a short introduction. So a quick introduction about yourself, your background, and your project. We can do like, yeah.
I can keep it up. Is this on? I don't think so.
Do you want mic?
Hello. All right. Patrick Kiefer, co-founder of Arrow Markets. I'm a PhD economist, but also a self-taught software developer, and I'm super passionate about building financial applications in Web3.
Okay. Thank you guys for being here. I know that last night was a little tough, to actually be here. My name is Udomosak, but you guys can just call me M. I'm from Bangkok, so people call each other by nicknames. I'm a university professor and researcher in derivatives, pricing and hedging. I'm also co-founded a project called FWX Finance. It's a decentralized derivative platform.
Hi everyone, my name is Roman. I'd like to introduce myself as a recovering ex-banker. I used to work for JP Morgan and a private bank, but I've always been a big fan of Bitcoin, DeFi, and smart contracts. And I'm now here building non-liquidating self-repaying loans. Thank you.
Hi, I'm Edward Mehrez, also with Arrow Markets, co-founder over there. My background is also coming from a PhD from Cornell University in financial economics, where I was specializing in financial mathematics and AI. Right now at Arrow Markets, we're doing a lot of interesting quant research, and I'm mostly on that side, as well as business development. So looking forward to digging into some of the very technical questions and trying to convey them as well to the general public. Derivatives are a challenging field, especially options.
Thank you very much. And I actually forgot to introduce myself. I'm Gaspard, co-founder of AP1. And so we're building a protocol doing interest rate derivatives. So derivatives, it's quite a more complex instrument than what we could have found in DeFi in the early days. What is your main user target, given that the spectrum of financial knowledge is quite diverse in DeFi, and how do you address it? Anyone?
I'll kick it off here. Are we going with one? Yeah, all right. All right, so I'll take it really quickly, then we'll go around. But when I think about options in particular, and a lot of derivatives out there, it turns out that people use them in TradFi, just regular retail. So it's not totally uncommon that they're a very useful product. There is a learning curve, and part of all of our jobs, I think, will be to communicate that and make it easier for people to use. But we need two sides of the market. We need both retail and we need institutional. So, and both sides want different things, and it's finding a good happy medium in between, I think.
Well, for Savvy, our main user targets are Power DeFi users, DAOs. At one point, we believe that as regulations will kind of evolve in our space, we'll be able to service real-world assets and obviously like institutional players as well. But today, the biggest thing we want to solve for is open finance, and therefore it's permissionless to all. So our main user target is everyone here.
I'll just comment. Oh, the mic works now. I'll comment quickly. We've actually done a lot of work internally at Arrow in terms of trying to educate people about how options work, about what kind of the advantages are of being able to use options for hedging and for speculation. And we actually have an amazing UX and product team. Diraj running out the door right now, for example. We can give him a shout out. Also Stanny, I'm not sure if Stanny's here, but internally at Arrow, we've put quite a lot of effort into kind of streamlining the user experience and making it really easy to understand what options can do for you, how to use them, and why they're valuable.
Well, I kind of agree, because these days, if you ask people what options are, there probably not many people actually know how to use them for hedging, right? For futures, it's just simple, right? You just people use it for betting instrument, right? If they believe it goes up, they go long, and just like that. But it can be used to hedge against against the position as well. I think the point right now is to actually how to educate people to actually use it more as a hedging instrument, and maybe can we like build like a UI UX UI like friendly enough so that they don't actually need to know like how to use options. Like for example, if they have like big positions in Bitcoin and they just come and lock the position so that they know that if Bitcoin goes down, their position is not dropping. Just like that, and then we do like things behind that for them. That will be a lot easier for users.
Amazing. Very, very nice to see that you're welcoming the DeFi user as it is, and that you're actually helping them with their level of knowledge while the ecosystem matures and this user base evolve. And actually, so when you take your current products, maybe comparing them to TradFi or trying to build a roadmap and how you want to make it evolve, what are the biggest milestones for you? Like, what are the challenges to grow your different products and protocols? Yeah. Here we go.
Same order. I think in terms of challenges, it really is getting people, one of them is what we just talked about, just getting people comfortable with the idea, the notion of different derivatives. And I mean, we've all seen how powerful perps can be. They've definitely taken off, and people like them for betting instruments. For something like hedging, like was just mentioned, that's more of a complicated problem. So, creating things that are prepackaged and that reflect somewhat of a fair price, that's also very important. So, when I think about options, when I think about derivatives in general, and I think about one of the most important problems is, are we going to come about it through an AMM, or are we going to come about it through a limit order book, or is there going to be a hybrid? Each one of them comes with their own challenges. Limit order books fragment liquidity. AMMs help aggregate it, but then you have to actually come up with a fair price. You have to find a way so that things adjust and the liquidity providers aren't being screwed over, for lack of better words. So that's, in my mind, of course, I'm biased on that side. I think that there's a lot of a quant pull there, especially with respect to AMMs and how you come about this liquidity aggregation problem in derivatives.
So for us, the biggest challenge is trying to explain how to put into simple words that you can have assets that can generate yield and you can leverage that safely. So to explain to someone what a CDO is in the DeFi space, they're called CDPs, collateralized debt positions, which allow users to leverage their assets so that they can go then participate in slightly higher financial tools like Arrow markets using options while being able to hedge. And it becomes a little bit more difficult because you have to explain several levels of finance to people that may not be aware or may not have access to it traditionally. So that is one of the biggest problems, like education in general. Because, I mean, to be honest, a lot of the stuff we do here sounds like financial wizardry, and people are very skeptical from the beginning when they hear like that you can do X, Y, Z, when it was not even possible in traditional finance before. So having that barrier to cross that chasm is more difficult than people realize, and the biggest thing that we're trying to do is to help educate people along that way, and it is a challenge.
I'll build a little bit on what Ed was saying about the AMMs. I think one kind of challenge for us and one key milestone that we're hoping to hit, before the end of this year is being able to come up with, reasonable prices for markets for new markets essentially. So we want to be able to price options on underlying assets where there are no option markets that we can use for reference prices for implied volatility. And so our quant team at Arrow is working, pretty hard on this, and this is something that I think, once we nail this can be really powerful. But from a technical standpoint, just building on, what Ed was saying, this is a real challenge. But I think this is something we're going to be able to crack this year. So.
Well, we are working on that too, like like our platform, we actually do like hedging of futures contract, like that kind of thing on chain automatically. So right now we are looking how to do like hedging of crypto derivatives on chain as well. But it seems like the underlying has a really like high volatility and fat tails and things like that. So it's a challenge. But I think the most challenging thing at the moment is how to actually onboard other people, like Web2, users to actually come to our, kind of venue. Because I think it's too early to talk about like competing against each other. Because if you look at, the leading one, like GMX, right, the trading volume is like above like 100 million, right? But if you look at the whole market, it's like, I don't know, like 30 billion in only crypto market. But we haven't actually onboard like those like Web2 users to come to our venue yet. So I think what we are trying to do is that now we are building a wallet, like we have FWX wallet, so that specifically for the platform. So the users, they can just download the wallet and they don't need to do like any customization because all are already there. No tokens adding, no like changing chain, like nothing like that. Download wallet, fund the wallet. And we can onboard, we can use like on and off ramp, to onboard fiat currency, download wallet, fund the wallet, and then start trading. And then we can onboard them without telling them how blockchain works, how MetaMask works, and how those like, kind of wallet work. And they're not gonna listen. Very hard, very tough. Yeah.
Thank you.
Let me just build on that very quickly. I agree with the point that none of us kind of have enough users yet in terms of the people who are building DeFi derivatives that we should be thinking of ourselves as competing with each other for users. I think the real thing we should be aiming for is how do we get the growth in terms of the user numbers? It's to tap into the markets of users, of people who aren't using DeFi derivatives yet, and we can all kind of work to better educate those people, make the onboarding easier and so forth. So the right thing for all of us to be looking at is how do we actually capture that user base? We shouldn't be thinking about competing with each other. None of us have enough users for that to kind of make sense at this point.
Agree.
And do you think in the longer term it would be some kind of winner takes all market, or you definitely see different protocols with different mechanisms for the same derivatives?
What's the question?
In terms of liquidity volume and usage, you mentioned that right now basically you're not competing because you're sharing a small piece of the big pie that is not discovered yet, if I understood well.
I think the competitive forces, will play out, but they're going to play out as we kind of start to tap into this much larger user base. They're not going to. I think thinking about maybe there are a few different ways to provide liquidity or to price options in the space. We shouldn't be thinking about that as competing for the users from each other. But competitive forces will play out over time, and if some of those mechanisms are actually more efficient, then they will do better in terms of bringing on the users who aren't using these products yet.
Yeah, and just really quickly, there's actually a more algorithmic way that we could all work together as well. I think, Roman, you said this. Open finance and integration allows us to be even more cooperative than TradFi. And that's absolutely beautiful because not just do we have opportunities to work more with each other, test things out too, see what works for us in a very sandbox environment, but eventually we'll be able to communicate to regulators and the Fed, like, look, you want to understand how one of us going down affects everyone? Here it is. You can actually simulate it. This is what's going to happen. It's much, much more transparent than the financial system, and that's one of the things that's absolutely beautiful about it. One of the areas that I also think will be super useful for derivatives protocols to get together are in establishing something akin to a clearinghouse. Because it could be that any one of us, for a particular derivative, there might be some sort of issue with that. Pricing is off, hedging is off, right? And some of those liabilities, there might be issues. And then it can get kicked back to a clearinghouse. That's what happens in TradFi. There's a consortium of different broker-dealers, and they're able to cover liabilities if they need to, for deep out in the money options, for example, or just any deep in the money derivatives where one side of the market has dropped out. That'll really help with this big challenge of especially how do we onboard more people who are selling these derivatives, who are on the liability side, and they don't want to fully collateralize, which is already how traditional markets work right now. And we really need to step it up when it comes to that in particular.
I just want to touch on the composability point, because I think that's a beautiful thing about Web3. You know, we can just build like things on top of each other, right? It's permissionless. We don't need to ask anybody. And I just published one academic paper on hedging options, like using other derivatives. So let's say if there's like one platform, like, you know, building like other derivatives, so I can make like exotic options, like, you know, any payoff that you may like. So we can let like user like drawing like a payoff, like, you know, however they want it to be. And then, you know, we connect it to another venue to actually use those options, like, you know, to actually hedge like this kind of derivative. This is just an example that is going to be like this in the future, but we're just starting. So, you know, people are building pretty much the same, not the same, but similar things. So that's why like you see like a competitive, you know, like competitiveness in the market. But in the future, it's gonna get a lot more diversified.
Yeah, I think, so two of the words that I love to use are money Legos, because this is what composable finance is all about. And matter of fact, to answer your question directly, do I believe that there will be a winner takes all? Actually, I do not. And the reason for that is because I wouldn't even have a reason to sit up here if these builders weren't building something that can create underlying yield. So to answer the question, no, I think it'll be a bunch of us that will be building, and just like he said, it'll be a consortium. It'll be a group of dedicated people that are kind of bridging liquidity like you've never seen before, and it will happen. It will take time. Just you know, we have to pace ourselves. We have to create these bridges between protocols, and that takes a lot of time. It takes a lot of effort. You have to test, and this whole space is test in production right now. So, you know, there are mistakes happening. There are a lot of ideas that are being tested out. Not all of them will succeed. And by the time we kind of remove all of the fat and leave something that's actually tangible, that can be usable by everyone, it will take some time. But I do not believe that it'll be just one of us. It'll be a whole bunch of us.
Amazing. Very glad to hear that, actually. In the first question, you actually answered saying about the user base, saying that you address the regular DeFi users mostly, and that eventually that will evolve and potentially bring institutions along the way. In terms of liquidity provision, are you mostly targeting, I would say, retail liquidity provider as well, like the one that discovered DeFi, through some funds at Footcoin initially, earn money, lost money, earn liquidity mining, earn yield in a more or less organic way? How do you build that efficiency in terms of liquidity provision? How do you make yourself competitive on that aspect? And are you mostly targeting, again, retail liquidity provider, or maybe liquidity provider as a service? Are you working with market makers? Are there market makers in TradFi? Are there market makers in DeFi? Are there very much retail market makers? How does that work? In a very, I mean, maybe a more complex product like financial derivatives, like on-chain derivatives, maybe a more complex than simple line of credit protocol.
I'll kickstart. Well, I think we need to do both, like, you know, for institutions and retail. Like these days, like lots of people are, you know, thinking that, you know, in financial institutions like banks, you know, these are centralized entities, right? And they are thinking that we are threatened. But actually, I don't think they are thinking that, because, like, for example, we are invested by two biggest commercial banks in Thailand, and they are investing in us because, you know, they're looking at DeFi as a really efficient, you know, tools to be integrated into traditional, you know, finance. So in that case, we should be approaching centralized entities, centralized institutions. Like they have lots of liquidities. That will be one way. Another way is to actually provide like real organic yield to the user. You know, we have passed the era of, you know, 100% APY already. So in our platform, like we give like 20% of the trading fees to the user. And in that case, if we have like 500K trading volume and our liquidity pool is 5 million, we can generate 20% APY to the user, and that is real yield. That's not like, by giving away like governance tokens. So we need to kind of build like that kind of thing to make it real, to make user to know that this is where the yield came from, not just like giving away, like inflating tokens.
Congrats on this, by the way. I've been talking to banks a while ago, and it's not the easiest thing when you're building a result finance.
I think there is an important interplay between institutions and retail. It's just, you need them both. It's just, it looks different in Web3 than it does in TradFi. So, how do institutions and retail interact in something like Robinhood? It's not very transparent. The retail's order flow is sold to Citadel. That's basically Robinhood's business model. You see kind of variations of that in most, centralized, retail-focused brokerages. And so in Web3, we still want things like predictable liquidity. We can get that from institutions. It's just that the way that interacts with the retail flow is transparent. It's on chain. It looks completely different, but you still need that interplay between the institutions and the retail.
One thing that I'd like to emphasize here is for liquidity providers, this goes back to the point that was mentioned of how do you create real yield for people. And when I think about derivatives, I think about promises. There's usually a time component in them. It's, you enter into an agreement, both sides have some obligations. As time goes on, they have to fulfill those obligations. And sometimes a promise doesn't always work out, okay? And liquidity providers, when you think about something like an AMM, if you take it back to how traditional market making works, and market makers are providing quotes, competitive quotes on markets, on limit order books. And in doing so, they're also taking on a lot of liability when people come and buy these different derivatives. Now you can think about liquidity providers as those who would back in that sort of system, the traditional finance market system. Liquidity providers would be thought of as those people who are financing the operations of the market makers, okay? They're the ones who are getting the profits as well. They're financing the real activity of these people coming in and making markets liquid. So when I abstract away and I think about AMMs, I think, okay, the system should be similar in this way. It should be from the productivity of making these markets liquid, how am I as a liquidity provider getting compensated where the protocol is facilitating the creation of the liquidity. I have to believe in the protocol though, because I'm putting my money in that protocol passively most of the time. So that's typically what I think of when I think about the challenges. The challenges are how do you create, it's almost like another financial product there. How do you create some real value that represents some backing of a particular strategy? And in that case, over time, those yields will also go down. They'll, I guess theoretically, it's going to be risk return kind of profile. And there's going to be different, people should understand for higher yields, there is going to be higher risk.
So with the composability of automated markets, we think that, the liquidity is coming from everywhere. The on-chain activities treat everyone equally. The goal for us to ensure that we work with the proper market makers to create very liquid markets for synthetic assets. This will allow people to reduce their kind of complexity in terms of how they use their assets already, because now they're able to have a risk-free leverage with us, right? So that allows them to kind of work on their strategies a little bit more aggressively if they choose to, or to go into the same kind of strategies and lever up or hedge. So, for us, market making is thought of a little bit differently, because not only will it be on decentralized financial services, but also a lot of these projects will eventually be traded still on centralized exchanges where there's a majority of volume comparatively, right? Like we said earlier. So a lot of the market making that needs to happen here is also to ensure that there's price parity between these synthetics. And when that is a problem, arbitrage becomes not a healthy and financial asset or a financial way of doing things, but a very extractive and kind of a net negative for the space. So for us, market making and liquidity provision is all about making sure that there are no kind of gaps or valleys between prices, no matter where they are.
That's an absolutely great point. In terms of arbitrage, it's like a double-edged sword. You know, it really is. It's like necessary evil, but you want to bound it because otherwise, LPs are going to get fleeced.
Thank you very much for that. I have maybe one last bit of a boring question that is usually frustrating to answer as builders, but that may be relevant, especially right now in Europe. What about the regulatory landscape? Because when we are doing very wizard stuff, we think that maybe the regulator will not understand exactly what we're doing, but when we're doing on-chain derivatives, we're pretty much using the same languages and exactly the same names as what exists in TradFi, and that is pretty much, extremely regulated. So what about it? What's your take?
Yeah, I'll just say quickly, at Arrow, we have to be fully compliant. We have a former CFTC prosecutor who helps us with our terms of service. Unfortunately, we can't be available to U.S. users at this point, but our objective is to be available to U.S. users in the future, and I think that's kind of how you win. And so this is something that we're thinking very seriously about, and we're working closely with our lawyers on. I think being able to tap directly into the U.S. user base is going to be critical for the growth of the space.
Yeah, so I'm actually a big fan of talking about regulation, and I'm not going to bore everyone here about that because we don't have enough time. But from my perspective, I think the biggest thing that we will see is all of the regulations are going to coalesce. As these markets grow, you'll see that traditional finance is going to adapt to this. Right now, there's a whole thing between what regulations will look like. Some people are saying, the SEC or the CFTC are going to figure all that out. Others are saying that we should look at Europe actually as the leader here because of MiCA, which is markets in crypto assets, right? And that is a great set of regulations that are kind of creating a really strong clarity on how regulators should treat these new asset classes. And they're not, in my opinion, actually very prohibitive. They're trying to be consumer protection first, which is the guise of regulation. Not everyone agrees with that, but if we're looking at and comparing the two, I would say that probably the leading indicator for how we think regulation may shape is looking at Europe's MiCA laws.
Okay. Well, talking about regulation, it's it's kind of tough, especially for new projects like us. We haven't launched yet. We're launching this quarter. It's kind of hard to be fully compliant. We're paying lots of money to lawyers, advisors to actually come and help us, not to actually break any laws anywhere, because we are decentralized, so it's everywhere. That's a problem. What's gonna happen next? If you guys know about the Thai market, right now we have multiple licensed exchanges, and the regulation were unclear before. And when we have big parties, banks, one bank actually has one crypto exchange, so it becomes a lot clearer. So my message is that we probably, I don't know, it's probably a conspiracy theory that we probably need to wait for bigger players to actually come to play, because we are actually competing against Wall Street giants, right? So they would love us to actually get their customers, their users to actually get into DeFi platform, but eventually I believe that they can't go against the mainstream. So people are going to move towards the decentralization. We see the paradigm shift. So eventually they're going to be moving to decentralized space, and after that, the regulation is going to be a lot more clearer. It's going to be a lot more friendlier, I believe. I hope so, yeah. But not to prohibit small players, get rid of small players in the market.
Yeah, just one quick thing on that. I do want to add that whatever the regulatory landscape looks like, that DeFi should push against censorship resistant. We should be trying to be censorship resistant. We don't want to close off a lot of developing countries, for example, to access our protocols. And we want to have it be as open as possible. And it would be nice, this is another area where a consortium can be formed and we can lobby for things like this in different major jurisdictions, major countries where regulations are an issue.
Thank you. I think time is up. Maybe I should have started with that actually, not so boring question. Thank you everyone for all the insights. And yeah, let's continue the discussion offline. Thank you.